Barney way back in the day, and her mentor, Alan Shaw, two of the greats. I would say those two, and Bob Farrell at Merrill Lynch, and a couple others. Um, uh, the depth of their research is second to none, but I could tell you stories about that all day. But the premise for a market technician. Well, first of all, I looked through some other investment channels. I never did that before to see what other people were suggesting, and and when I look at these channels, if I was a investor and I'm trying to figure out what to do, it would be so confusing because most of these channels never come out and tell you what to do. They don't say, I think the good thing about my channel is I say, buy silver, and here's your risk and, here's your reward. And it's really black and white. I'm really sticking my neck out to do that. But I hear, I was watching one last night and it said, well, if the Fed raises rates, gold's going to do this. And if the dollar does this, and gold's going to do this. And I'm like, you know, those are all just noise in the market. The great thing about technical analysis, you can look at any chart without a name on it, and I can tell you whether I'm going to buy, sell, or short something. I don't need to know all the BS that CNBC is. I don't think I've watched that show in like 20 years. It's so bad. So, just remember that a market technician, the premise that it's built on is that the markets aren't rational. They're driven by human emotion, and people get too euphoric at market highs and they get too pessimistic at market lows. And I used to subscribe to the Jake Bernstein, his sentiment indexes, and they were so good. And whenever you got over 90% bulls on something, you were kind of getting near a top. And if you're down in the single digits, when things are crashing, you're getting near a low. I don't have those available to me. I have some other things. They're not quite as good, but anyway, I, I think when you're investing, you got to really get outside of that herd mentality. The great Jesse Livermore, I believe he was like in the 40s. He was the first one that made $1 million on Wall Street, and he was a technician. He killed himself actually, but he would. You should check out his book about him. And his thing was he didn't want any newspapers. No, I don't think they had TV then, but no newspapers, no nothing. He just wanted white walls, and he wanted his chart, and he wanted no external influences. So it worked for him, and I think it might help slow some of you out there that want to jump to the next hot dot. Okay, so my channel, I'm going to tell you whether you should buy, sell, or whatever. It's black or white, and if I'm wrong, you're going to know I'm wrong. I don't see that with a lot of these other channels. Maybe it's just the ones that I was checking out. But anyway, so let's get into it. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. We're going to go through this, I believe it's 7 buy recommendations since I got out of Bitcoin today, and I sent out a notice today that we took a profit with an 8.5% gain in 2 weeks. I'm usually not that short-term oriented, but there wasn't a lot of momentum there, and there's other things that look a lot better, and so I'll take that small return. Hopefully you do too, and then I'm going to move on. So here's one that I wanted to I think there's a really good opportunity in the precious metals right now. Sentiment still isn't really bearish enough, but we are into a fifth wave advance. The Elliott wave theory believes trends or cycles go in waves of 5, with 1, 3, and 5 going in the direction of the bigger trend, and 2 and 4 are counter trend reactions. This is a big long-term chart. So if you can picture going back to 2002 was when silver started its third wave advance, and third waves are the most bullish. I want to say it was at like $2 and it got all the way to 50. So Yes, I did participate in a lot of that. This was the bullish channel that kept all the price action from that time when we broke out of the top and had a throw over top. And here's where I went bearish. Pretty good call on that one. I haven't done so well over here. I got out too early. But after that big third wave advance, we had a fourth wave triangle. And this fourth wave triangle lasted for, I don't know, 12 years or so. And we had all the necessary touches A, B, C, D, E. We broke out. You measure the base of this triangle, you project upwards, and you come up with a $64 price projection. And we have exceeded that. That doesn't mean it's dead yet. This is obviously a third wave within a fifth wave. And you can see this kind of blow off top a few months ago. This is a monthly chart. So one, two, three, four, about 4 months ago. And, here's where I bought and sold and everything. And I got out at 34.50. So didn't do really very well on this. I did great on platinum. I did great on gold. Silver and natural gas are the two most volatile commodities, and they scare me to death. Did well back here, but not so well here. But I think we're getting another chance. But I wanted to show you this big consolidation, and this I specialize in pattern recognition, and so the bigger the pattern, usually the bigger and quicker and faster and longer the breakout goes and more profitable. So when I see something like this, I'm really on it. The reason why I don't think this is the end of the end, I just saw one of the investment channels saying, "Oh, silver's going to crash into oblivion," and I do believe that too. But I think we got one more higher high. Now, maybe I'll be wrong. But the reason why is when we hit this blow off top, we got confirmation on our relative strength index. This measures the underlying oomph of the advance. Is it broad based? Is there a lot of underlying buying? And of course, with this volume bar and this blow off top and this higher peak on our relative strength index, it confirmed this high. And now we've gotten after a decline, we've gotten a consolidation, and I'm expecting one more higher high to kind of do finish this whole thing off. And then I do think silver is going to crash in a big way, and I'll be the first one to talk about it when it's time. So this is big picture stuff. We're going to focus on this now. These again are just the buy recommendations and where and here's where I initiated again. So here we got that blow off top, the top of the third wave of the last fifth wave after we broke out of that giant fourth wave triangle, 15-year triangle. And now we got this kind of overlapping wave correction. And when you get overlaps like that, when you get straight up things like this, it means that's the direction of the major trend. When you get these overlapping waves, it means it's a corrective trend. It shouldn't be the start of a downtrend. That's what it's telling me. And this is actually what they call a falling wedge, which counterintuitively is bearish. I'm sorry, is bullish. You would think if it's downward sloping, it would be bearish, but it's actually a bullish pattern. And we got a breakout, and then we had a little bit of a fits and starts here. We had a nice bullish hammer last week, and we'll see what tomorrow and Friday brings. But you can see where my stop is at 62.5. We bought at 68.39, and we're at 70.13. So let's take a closer look at this because we're going to look at a very short-term chart on this. And I'll attach my last silver video if you want to see the whole thing. There's more information. This is intraday. Each candle represents 2 hours of price action. And you can see as we broke through here today and we were up 6.5%, what was I doing? I was selling. I sell on green days. On up days, I'm selling some. I don't care what it is. I don't care if I love the heck out of it. If I have 100 shares of silver on a day when it's up 5%, I'm probably selling 3 to 5 shares. If it's 1,000 shares, I'm selling, 30 to 50 shares. So, and the reason, so what I'm expecting tomorrow is maybe a retracement back towards this bullish rainbow convergence where all these moving averages have come together now and they should form support for prices. And if we get a type 2 retracement tomorrow, which we've been getting a lot of in all kinds of securities, it'll give us another chance for me to buy those shares back and to buy more shares back. And as long as we hold this 68, 67 level, I'm good with that. So I'd love to see something down 2 or 3% tomorrow and to buy more. If you still want to buy silver, this is your cue. Because if you buy it now, you got the best reward to risk possible. We're expecting a higher high, the final fifth wave of the fifth wave up, which would break 110. It's got to be higher than the prior high. So you want to buy it down here. You don't want to buy it when everybody's talking about it because once it gets up here, you don't your risk is way down and your reward is not that far away, and so your reward to risk is not that favorable at that point, right? Tomorrow we get a down day and you want to own silver, that's the day to buy it. And if it breaks down below that and it breaks our stop, we're out, but we got a fairly small loss and we move on to the next. So it's no coincidence that platinum is showing the exact same thing. Look at this triangle. It wasn't as big as silver's, but it was 1, 2, 3, 4. I did really well with this one, buying it here, getting stopped out, buying it back slightly lower, and then writing that up to 145. It was a 75% gain. That was about the price projection of this triangle, this 3-year consolidation. You measure the base of that triangle, you project it upwards. So of course it blew past that, and I wasn't chasing. I wasn't chasing. And now we've got a bullish wedge, falling wedge, which is bullish. And we got on a shorter term chart, you can see that it's broken out. Hopefully it holds there. And we bought on April 7th at 177.92. It's at 186.70. And again, I'm expecting one more higher high to complete this whole thing. And then I think the metals will be in trouble. So that's where we're at. Let's take a closer look at this. And you got the same thing. You got a bullish rainbow convergence. So I'd really like to see this come down tomorrow. Even though I sold some today, it was up 5.5%, 5.69. I'd like to see a pullback to 181, 182, and I'd buy those shares back at a cheaper amount and a lower price, and I'd also add to that, increase my position. And if it breaks this, then we got to reevaluate. Right now, I got my stop down at 164, but a break of this, and I might just go neutral till I see what's going on here. We'll take our small profit and kind of like what I'm doing in Bitcoin. There's a lot of fits and starts going on in the market right now. Okay, MP Resources. I sent out a short. I hope it showed up as a short. I'm not very good at this stuff. And this is one that I've been very high on. I've bought and sold this successfully a couple of times for big gains. Also, our what is it? Also the REMX, it's late at night here. REMX is the rare earth minerals ETF, but this is a rare earth mineral company based in the US and California, really the only one that we have of size, and China owns at least 60% of this market globally. We're really dependent on them for this stuff. So all that to say, reiterated my buy yesterday or the day before, but here's where we bought at 61.90. It's at 72.65. And again, I'm expecting a new higher high past 102. Again, what was I doing today? I was selling, it was up 6.75%. I'm selling a few shares. Now, tomorrow, if it's down a little bit, I'll buy those shares back. But that way you're going to kind of lock in, you're going to lower your cost basis, you're going to lock in some gains, and that's all a good thing. Okay, this is one I'm going to probably be commenting on tomorrow, Antero Resources. And oil got killed today. and natural gas got killed today. Antero Resources is mainly natural gas, and so it's got that going against it. And here I will attach the video that gives you the bigger picture stuff of Antero Resources because I've this has been the most complicated stock to trade, I think, in my career, which I've been doing this since 1992. I'm glad the light is dim. So uh, it's been very difficult, but I've made money in this and for our viewers, but it's been fits and starts. And, I know that's not what people want, but the potential upside of this is a double. So if and when it goes, it's got a big 4-year pattern. And so when it does go, it's going to be worthwhile. And so what I don't like today, we had a confluence of moving averages here. And if it couldn't have broke out here up here, then it would have promised a new lower low, but it did. So this was a type 2 bearish rainbow convergence where prices came back to the convergence of moving averages, but it was able to break through. So that was bullish. So, you're thinking, well, we're off to the races, but today, nope, broke down. And so that I'm not sure where that leaves us, but this is not a good looking candlestick. It was down 585. Here's where we purchased the last time. I mean, I made good money in this thing. Um, but let's look at, so tomorrow's really going to be critical because I'm going to show you a shorter term chart that's only this. And this is looking the opposite of silver and platinum. So we have a confluence of moving averages and we got price below those moving averages. So Antero Resources can sit here and pause and wait for these moving averages to come down. The decline should slow down on a short-term basis. So um, we will see if prices wait for the moving averages to come down to it, or what I suspect to happen is that prices will challenge this. And again, if it can't break through this, if it comes back and it has a big update tomorrow, but can't break through this, then I'm going to go to a neutral, and I'm going to at least I didn't lose 5.5% today. So if it comes back 3% or something and it's challenging this and it's unable to get through, I'm going to sell it. So I thought it was important. I had somebody that commented on this about a week ago. But this is a big picture of Antero Resources. So this is like silver was a few years ago before it broke out into its fifth wave. We got one, two, three, big fourth wave. If this thing breaks out, it should go up 30 points. So it should go to like $75 and we're at 36. So, but that's a lot. It's got to break out of this congestion zone. And so there's a lot of hair on it. I've had to redraw this triangle. That's why it's so complicated. Okay, here's one that's straightforward. Caesars Entertainment. Oh my God, I didn't update the chart. So this today, it's gradually been chugging upward. So Caesars, wow, it actually ended down today on the end. It ended down 1%, but right now it is at 27.76. So just it's probably 1% higher than it was a week ago. So it's up here. What we have here is a potential bullish inverse head and shoulders pattern. It's like a man or woman hanging upside down. And you got your left shoulder, your head, and it's forming a right shoulder. And if it can break above the neckline here, you measure from the bottom of the head to the neckline and you project up and you get a $47 price projection, which would be 72% higher. And the reason why I'm buying it before the breakout is I have a confluence of moving averages, a bullish rainbow convergence where prices are above that convergence. And it looks like they've come down and tested that convergence. So it should promise a new higher high, which should get us on our way to going up here So that's where we're at. We bought at 27.77. We're at 27.38. So nothing's really happened in the 2 weeks that I've owned this. But I think I know where my risk is. It's black and white, and I know where my potential reward is. And so the only thing that could disrupt this is maybe the overall market. I just want to mention we are going into a negative seasonality for the S&P 500 and the other major indexes in May. So we'll see what happens. So be careful. Don't get too euphoric here. There's a lot of risk in the market as we hit new highs and have a lot of AI speculation. All right, so that's Caesar Entertainment. Maybe they get taken out or something. Who knows? You got a lot of casinos and things in Macau. Okay, here's another one I added, kind of the same type of pattern. This is Sprouts Farmers Market. And this thing has come down from, I think it was like 150 or maybe it was 180, and it came all the way down. It used to be a real high flyer. I could never get into it. Just never had the right setup, and I watched it and I watched it. And after this big crash, it's just been basing here, for 1, 2, 3, 4, 5, 6 months. And it's an bullish inverse head and shoulders pattern with the left shoulder, the head, the right shoulder. I wish there was better symmetry here, but it's okay. It doesn't have to be labeled an inverse head and shoulders. It can just be a consolidation. But again, we got a type 2 rainbow convergence going on where prices are coming back to this convergence. And I know where my risk is. If it breaks this by, a clear amount, I'm out. And if it holds, the potential is 105, which is 33% upside. And I believe the point and figure chart is even suggesting a higher price projection of like 115 or something. So what was I doing today? It was down 0.62. I was buying more. So that's what I do. Union Pacific, this has been a great recommendation. It's not sexy, it's not exciting, it's not AI, but last week it was better than AI. Thing was up a mile. Um, this is a big symmetrical triangle. This is 3 years in the making. And what did I tell you that my expertise is pattern recognition. And the reason why I buy those is because I know where my risk is. And I know on breakouts of these big patterns that the upside is going to be large if it works. And, nothing's for certain. And the risk is going to be minimal. So, here's where we bought on April 5th at 248. We're at 264. The price projection arrived at by measuring the base of this triangle and projecting upwards is 335, which, again, you don't want to be buying it way up here. Actually, this has pulled back a little bit. I don't know if I have a shorter term chart, but this has a lot longer to go. I would buy this on pullbacks. This week, last week, what was I doing on this big up week? I was selling. And what was I doing this week? I've been buying those shares back at lower prices. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Give me your comments. Tell me what I could do better or worse. I know there's a lot I could do better. I know it's kind of a mid-century YouTube channel, my graphics and stuff. Anyway, have a great evening. I think the content is good. Tell your friends, neighbors, families. Adios.